Hi friends, at the time of recording this video, Nifty 50 has hit its all-time high mark 21,000, and in the last 1 year, Nifty 50 has given close to 14% returns. Now, in my view, right now it is not very sensible to invest in the market because people make money in the market when the markets are running at low levels, not at all-time high. So what do we do in this situation? In my view, in this situation, we need to find the stocks which are trading at all-time low levels, means that they have had huge correction for whatever reason, but they still remain fundamentally strong stocks, and maybe the reason that they're all-time low is because there are sectoral headwinds. And the moment the sectoral headwinds disappear, the stock prices are going to appreciate, and that is where we are likely to make good money. So how to find such stocks, I am going to explain to you in this video. And if you're new to the channel, consider subscribing and pressing the bell notification, because right now YouTube is not sending my video to all my subscribers. With that, let's get this video started. So what you see on my screen is a free website called Ticker Tape. Okay, I'm going to use this to screen the stocks. So first thing we are going to do is select the top 500 stocks. So you see on my screen listed 500 stocks. The second thing we are going to do is we are only going to look at mid-cap stocks for this analysis. You can do this analysis for large cap or small cap depending on your requirement. I'm going to do it for mid-cap stocks. So that gives me total 144 stocks here, which are all mid-cap stocks. Now, first thing we need to do is to find out how many of these 144 stocks have seen huge correction in the last 1 year, right? For that, a simple parameter that I'm going to use is I'm going to add a filter here, which is called 1 year return versus Nifty. So let us go ahead and add that 1 year returns versus Nifty here. So this simply means how much of returns these stocks have given versus the Nifty returns, right? Now, if I order this list in the descending order, so let us see how many stocks have given negative returns. Now you see here, for example, the first stock in my list is Adani Wilmar Limited, and it is showing me minus 53%. What does this simply mean is that Adani Wilmar in the last 1 year has given close to minus 40% returns. Nifty, as we saw in the opening of this video, has given close to 13% returns, but this stock has gone minus 40%. So overall, from a Nifty as a reference point, it has gone minus 53%, right? I hope this point is clear to you. Now, what we are going to do is we are only going to look at those stocks that have seen huge correction so that we can have more chances of booking good profits, right? So for that, what I'm going to do is I'm going to select only those stocks that have given up to minus 20% return. So that gives us total 9 stocks here. So these stocks have at least given up to minus 20% returns as compared to Nifty. So this is our starting point. So this gives us total 9 stocks. Should we go ahead and invest in these 9 stocks because they have shown huge correction? Absolutely not. What we are going to do is now we are going to understand how much of potential profit upside is there in each of these stocks. That is number one. And secondly, we are going to understand how much of risk we are taking in these stocks, because it is absolutely possible that the prices of these stocks may further fall, right? So let us try and understand how much of rewards we're going to get and how much of risk is potentially there so that we make informed choices. So for understanding how much of profit we are going to make, I'm going to put a simple filter which is called percentage away from 52-week high. So let us go ahead and select this. Now what it simply means is that in the last 52 weeks, at some point in time, these stocks would have hit their individual highest price point, right? Now we need to see how far we are from this price point right now, because if the stock has seen huge correction, there is a chance that it can go back up to this highest point in the next coming 12 months or 18 months, right? And that is what is going to tell us what is potential upside in that particular stock. Now, there is no guarantee that the stock is going to go back to its previous high, but it sorts of tells us that in the last 52 weeks, the stock has hit a highest point, and there is a chance that it might go back up to its previous high. And if it hits its previous high, then how much of profit we are going to make? So you see here, Adani Wilmar, for example, 76%. Right now, the price that the stock is available at is away from 76% from its previous high, right? Likewise, we've got these numbers here, and you can see this is the potential upside in each of these stocks. Again, let me repeat, it is not a guaranteed return. What we are seeing here is that from the last 52 weeks trading history, stock may go back to its highest point. Therefore, the maximum upward movement that we can expect is this much of percentage in these stocks, right? Now, everything comes with a risk, right? Especially if you're investing in stocks, huge risk in the individual stocks. So let us understand that. For that, what we are going to do is we are going to put now percentage away from 52-week low. Guys, nobody is going to talk and teach you these sort of concepts. And if you're liking this, simply press the like button. Let me know a simple thank you in the comment box. It will motivate me to do more research and give you these concepts, right? Now, coming back to percentage away from 52-week low. Now, right now, let us say we go ahead and invest in these stocks. What are the chances of this stock may go to bottom prices and we might see losses? For that, I am using this percentage away from 52-week low, meaning how far is this stock right now from its previous 52 weeks lowest point, because it is possible that the stock can again hit the lowest price, but what we know is then that particular point is going to act as a resistance. That stock may not fall further than that. Therefore, it is a good number for us to estimate how much of losses are we going to incur, if we are going to incur any losses, right? So if you see here, for example, Adani Wilmar can go down by 32%. Now we know our range of making profit is 76% and 32% lower. Now Adani is altogether a different story. Again, I'm not saying that Adani is what you need to invest. I'm simply taking these stocks and telling you a structured way of going and finding how much of profit you are likely to make and how much of losses you are going to make. Now we are not going to filter out based on this, but it sort of gives you some indication, and we are going to use this in filtering these stocks even further, because I'm not going to invest in these 9 stocks. Let me now show you how to find out of these 9 stocks which are fundamentally strong stocks. So to check how many of the stocks out of these 9 are fundamentally strong stock, I'm going to use very simple filters. So what I'm going to do is add here, for example, let us say last 5 years historical revenue growth, whether the company has given good revenue growth or not. Let us consider that. Also, I'm going to consider last 5 years historical earning per share growth. Very important from investors' perspective. Let's add that. And also, I would like to take last 5 years average net profit margin, whether the company is growing profitably or not. So let us add that here. Also, last thing I also want to look at is not just the last 5 years. I want to check the recent financial year's profitability. So for that, I am going to consider a filter called net profit margin, which is in the last financial year, how much of net profit margin a company has given. Let us add these, and you will see a bunch of numbers coming in here. And simply, I am going to select only those stock out of these which has given some positive growth, right? I am going to just discard the ones that have given me negative growth. Because if a stock has given negative growth in these 4 parameters, what it tells me is that potentially this correction that we are seeing is not a good correction. It is a bad correction because fundamentally the company's quality is deteriorating, right? So for that, what I'm going to do is only going to select where there is a positivity here. So let us say 0 to whatever level, I don't care. So revenue growth. Now let us look at the EPS growth. I'm going to select higher than 0. So that is also good. And last 5 years average profit margin, if I'm going to say 0, more than 0. So that is again going to filter few other stocks. And now net profit margins, I'm going to select 0 to positive results. So this gives me total 6 stocks that have given me positive fundamental growth in the last 5 years, as well as last financial year, it has shown me positive net profit margins. So should we now invest in these 6 stocks? Absolutely not, because I really put a lot of rigor and filtering into my investment methodology to be safe, but at the same time make good money, right? So with that, what we are going to do is understand out of these 6 stocks, which are the stocks which are undervalued right now, right? From a valuation perspective. So for that, I'm going to use a very simple filter. So I will go here and select PE minus sector PE. Now people who are using ticker tape, you will not find this filter. I have created a custom filter. Now how to create custom filters, I'll cover some other time, but simply do a Google. I'm sure you will be able to find it. So what we are doing is PE minus sector PE, trying to understand what is the current PE of the stock versus the sector PE. And if the stock's current PE is less than the sector PE, then it tells me that the stock is undervalued from a sector's PE perspective. Extremely important parameters. I can talk about valuation for hours and hours and we will not get anywhere, because valuation is a very complex game. So I'm using a very simple logic here, which is PE minus sector PE. Let us go ahead and add that here. So I've added PE minus sector PE, and now I'm going to filter it by negative and positive. So let us see. First, I'm going to put negative ones. So out of these 6 stocks, now we see 2 types of stocks. So first 3 stocks, 1, 2 and 3 are showing here that PE is less than the sector P. So this is the PE and this is the sector P. Means that these are most undervalued out of this 6, right? Now that means that remaining 4, 5 and 6, they are trading at a higher PE than the sector PE. So what it means is that there may be some more correction that you can wait for. But in the top 3, it feels like to me that maybe this is the right time to invest in these stocks. Not a stock recommendation, I am telling you my way of thinking, how I look at the valuation. But in 4, 5 and 6, because right now the PE is still higher than the sector PE, there is a chance that it might get corrected further. So maybe we should wait for some more time to see if the correction happens or not, right? Now what I'm going to do is go back and filter this list again by what is the 1 year return versus Nifty return. So let me go ahead and filter that list by that. So if you look at these 6 stocks, UPL for example right now is showing that it has had minus 36% correction with reference to Nifty 50, right? Now again, what we need to do here is look at these 2 buckets of stocks and do some further research. I will give you a couple of examples of why we need to do some research, because if you don't do further research, you might still get trapped into a wrong investment, right? So for example, UPL. Now we need to understand why UPL is right now trading at lower levels than its sector PE and why there is a still huge correction going on in UPL, right, as a stock. So for this, I had covered UPL commentary in my previous videos. Let me replay that video for you for a minute or 2 so that you can get the gist and I don't need to repeat the same content. So what you see on my screen is their quarterly results, and you will very quickly see that the last 2 quarters, June 2023 and September 2023, their profits have fallen down sharply. So it has gone down from 1000 crore to 100 crores, and now in the September quarter it has gone down to minus 293 crores. So the company have started to make loss. Now what is causing this is what we need to understand. So for this, if we go and read their management's commentary here, page number 14 of their Q2 results, Mike Frank, one of their CEOs, is talking about what is causing this fall, and he in fact explained this in the previous quarter as well, concept called as distributors destocking. So flashback 2 years ago, what distributors were doing for this business typically is that they were stocking more and more products. Why? Because 2 years ago during the COVID time, the interest rates were very, very low. So distributors had a lot of working capitals with them. They could borrow more money and they could stock the products. Also at that time, the supply chain was not very reliable. So they could not rely on supplies coming in time. So they were actually stocking a lot of the products at that time. Now what has that happened is in the last 2 years, they have built up a lot of inventories at their place. So now distributors have been trying to liquidate or sell or get rid of that inventory, meaning that they are not buying more and more product because of the inventory built up in the last 2 years. That is the reason number 1 that why the company is seeing fall in their revenues as well as in profits. The second reason that the company mentions is that overall the company's sector is facing the headwinds in terms of price challenges. Naturally, if the distributors are not buying, the demand is going to be low, and what that will do is there is going to be a price war in the market. So right now the prices of these products that they're selling is going down, again hitting their revenues and profits. But if we read the page number 6 of their Q2 results, you will see that what their management is right now seeing is that the pricing front, the prices have been bottomed out in Q2. So hopefully the prices have stabilized and that they are not going to fall further. So this commentary about UPL would have made you understood why the stock prices have fallen, because the revenues have been falling. But more importantly, if we now look at the future prospects of this company here, let us look at page number 6 of their latest Q2 earning results. And you will see that management is seeing that they are confident of an improved second half performance of this year. So there is a chance that the company's performance may improve in the next 2 to 3 quarters, giving the revenues a boost, and therefore the share prices may go back up to good levels and you can make profit. Again, not a recommendation, but this structured approach has given you how to analyze huge corrections. Let me now quickly pick up another example of, for example, let us say Page Industries Limited, the second stock that we had in the list here, which is right now trading at a higher P than the sector P, so that you can get both the examples in your mind. So Page Industries, for example, last 5 years stock history, if you see, all-time high was at around 54,000 level, 54,000 rupees per share, right? And now it has come down to 37,000 levels, right? So there is a good correction that we have seen in the last few months here on the stock. So if you look at page 12 of their latest earning presentations, yes, you have to read earnings presentations. And if you are investing without understanding all of that, you are just simply gambling your money. And I don't want you to do that. I want you to learn it, right? So subscribe to the channel because you're going to learn a lot by simply this approach and analysis, right? So page number 12 here, you see the revenues for Q2 has fallen down. If I show you overall page industry journey, you will see here that from a P&L perspective, March 2012 onwards, the company has been sitting on the highest ever revenues, highest ever profits up to March 2023, right? But in the last couple of quarters, what is happening here, if you see Q2 results, the revenues have come down slightly. If you see, there is a degrowth here quarter on quarter as well as year on year, right? Why this is happening? Simply because if you read page number 3 of their earnings transcript, you will see that demand in the innerwear industry is right now subdued, meaning there is a fall here in terms of people buying underwears or speedo, swimwears and things like that, which page industry sells. And that is the reason that companies' revenues are down. Now, is there a fundamental change in companies' strength? No, company is exactly the same. It is selling the same products at the same prices. What is happening is there is a low demand right now in the market. And when the demand in the market picks up, what is going to happen? That companies' revenues will start to go back up. Investors will start flocking to buy the stock and you stand at that time chances of making good money. But right now you need courage, you need conviction to be able to invest in such companies. And the only way the courage and conviction comes is by doing proper study, by doing proper analysis. And I post a lot of such comprehensive analysis on my YouTube member community. You can consider subscribing to that community because I write long posts, comprehensive analysis that will help you make decisions or that will help you give a direction. Now comes extremely important point. If you decide to make any investment in any of these stocks, depending on your research, just a simple tip that please do not invest whatever money you want to invest in one single go. You want to invest 1 lakh rupees and let us say you want to invest in, let us say, Page Industries, right? Or let us say you want to invest in UPL Limited. What you need to do is break that 1 lakh rupees into 2 or 3 chunks and wait for a few more weeks, right? So you take that position and you invest in multiple batches because you never know when the price may get corrected further. So never invest all of your money into one go. Put it into 2 or 3 chunks over a few weeks of time period and wait for at least 12 to 18 months. Don't go and check your portfolio every single day and say, oh, has UPL gone back up? Has Page Industries gone back up? No. You have to show some patience for these stocks to recover because the sectoral headwinds do not just disappear like this. They're going to take some time. And this is where the patience, conviction, courage, all of this play into the investing. Also, let me know in the comments if you would like me to do full fundamental analysis of any of these stocks. If I get good comments, then I would consider doing a full video on selected stocks. Lastly, I'm likely to take some positions in some of these stocks and I will announce that on my YouTube member community. If you want to know that, you can consider subscribing to my YouTube member community. I hope you found this video useful. Please give it a like and I will see you in my next video. Until then, keep rocking.